boy.
What is up, YouTube gang? Oh my goodness, it's been a while since I did one of these type of videos, but man, I am happy to be back doing one of these videos, man. I hope everybody has been good. Hope everybody's been doing great. And for the ones that's been waiting on this trading video, I'm back, man. I'm back. I know it's been a while since I made a trading video, but I had to take a break from it because I was not the strategy I was using. It just wasn't clicking for me like how I wanted it to. And after a lot of failed attempts and just couldn't get it to go, I had to take a step back from it, and I had to reevaluate myself and realize, like, okay, I really need to find a strategy that I'm comfortable with and something that I want to something that's very easy for me to understand, and something that isn't too difficult for me to explain. Although I'm very bad at explaining things, I'll do my best to explain what I do now as best as I can. So I'm sorry for taking a break from trading, but moving forward, I'm going to try to push out as much trading videos as I can. It's a little difficult for me to push out trading videos, being with the job that I work, and also the time that I have to put into my job. It's gonna be a little bit difficult, especially with like live trading. It's gonna if you ever want to see something live, that's gonna be difficult for me as well because of my job. But I can show you like little reviews of trades that I possibly take, that I'm able to take, or trades that I would have taken, or just some setups just in general, things of that nature. So just work with me. I'll do my best to provide as many of these trading videos as I can, and we're not gonna waste any time. We're just gonna jump right into it. So with that being said, there were a lot of things that I've tried. I tried what's the supply and demand strategy. Starting out, I tried like the trend lines and all that jazz, and come to realize that a lot of that stuff wasn't working for me. And then I ran across what most people know is ICT, aka the Inner Circle Trader. I came across him, and then I just started to watch how he trades, and I started to look at some of the things that he was teaching. And the one thing that stood out to me that I really liked from him was the OTE strategy, which stands for the optimal trade entry. It's very simple. It's very straightforward. There's nothing too difficult to it. It has a set of rules that you can follow, and that's just something that after watching it for a while, it was something that was just very simple for me, which is what I wanted, and something that I don't find too difficult for me to go into my chart and implement. So that is what I follow. I did try other things like the silver bullet that he came out with. I tried the 2022 mentorship model, and they both had their days where it was successful, but at the same time, it was something that I felt like it wasn't for me. I would say I had some success. I had some ups and downs with both of them. But when I stepped back for a while and realized, what it is that I found simple, I realized that it was the OTE strategy. It was simple, and it was straightforward. Got to the point. There's a set of rules that you follow. And that's it. And it's just straightforward. It's not a lot of rules, which is good for me, but there's a set of rules. You can take entry really easy, which is one of the things that I did struggle with, was how do I enter and where do I enter? And this strategy just gives me, the things that I want and need, some things that I can target. It gives me where should I enter. It gives me a time frame to enter. And it keeps it simple for me, which is something that I like and something that I use moving forward. I've been testing this model out for a while now, and this is something that I'm going to use moving forward, that I find that is going to be successful for me. And hopefully I can break it down for you anyone who's watching this, hopefully I can break it down as much as I can for you, and go from there. With that being said, though, let's just jump right into it. Let me break this down for you as much as I can. So before I get started, I'm just here to say that I'm not here to really please the ICT haters or whatever you want to call them, people that don't like ICT. This is just what I do. This is the strategy that I use going forward. And if you're a student out there and I'm explaining something a little wrong, feel free to comment and let me know. But this is just me. This is just what I do. And this is just the strategy that I'm using moving forward because this is for me. So to start off, in the market, based around this strategy is one thing that I try to target based around this strategy is the previous day high and the previous day low. If you go back, and I'm going to show you real fast, if you go back and you watch ICT, this is his channel right here. If you go to the playlist tab and you go to this right here, this playlist, you want to watch this playlist and you want to watch the very first video. It's key. He's going to tell you a lot of things. He's going to mention how to trade this strategy, a bunch of things. He's going to let you know a bunch of things there. Also, you want to go back. If you want to check out someone else that's pretty good with this, you want to check out Inner Circle Hotshot. I really like this guy. He's really good with this strategy. He's someone that I follow, and he uses the OT strategy as well. So let me get back to the chart here. So this strategy revolves around previous day high and previous day low. Why does it revolve around that? So in ICT's video, I believe it's volume 1, he states that above previous day highs and below previous day lows, there is a bank of orders that generally reside in the market, and that is known as liquidity. So liquidity, think of liquidity as places to target, in my opinion. That's how I see it. You're more than welcome to go back and watch ICT to get more of an in-depth explanation of that. But just know that above previous days highs and below previous days lows, you're gonna have liquidity. Sorry about that. So basically, when the market has a bias or a trend, which is if you think that the market is bullish or bearish, think of it that way. So for example, if you believe the market is bullish, or in some people's case, if you believe the market is trending up, which is bullish or going up, then you want to expect price to trade to or through the previous day high, and vice versa if you're bullish or if you expect the trend to go down. Those are some things that you want to take note of. You're not going to always be right with this. It just happens in trading. When this is a game where you're gonna win money, you're gonna lose money. It happens. That is a part of trading. If you cannot handle that, then this is not the thing that you want to be in. If you're not comfortable with losing money. But yeah, that is what you want to think of. If you're bullish, you want to expect price to go through previous days high and expect it to trade through it. That is one of the things that I look for when I expect bullishness, and when I expect bearishness, I'm looking for the opposite. I'm looking for price to trade to the previous day low. If it hasn't already traded through the previous day low, I'm looking for it to trade to the previous day low. And if it already traded through it, I'm looking for the continuation. I am not looking for reversals in this strategy. I'm not looking for that. And the same goes for when I am bullish or when I am expecting the trend to continue higher. I am looking for continuation. If I expect bullishness, I'm expecting the previous day's high to be traded to or through. And I am looking for my trade there. Now, if price explodes through the previous day high or previous day low and it doesn't give you a trade, That's it. You just walk away from the chart and you leave it at that. That is going to happen with this strategy. It's going to happen. You're going to get chances where price just explodes and it doesn't give you an opportunity. That's okay. That happens. But like I say, I'm not looking for any reversals. I'm always looking for the continuation of trades. So let's get on the chart. I'm not going to show you on the S&P. Let's just do the dollar yen for now. So this is the dollar yen right here. I'm going to show you something quickly that's very important that you want to note with this strategy too. I'm going to show you swing high and swing low. So if we come right here, take a look at these three candles right here. These three candles. Let's focus on these three right here. And if you notice on this candle right here, you have a wick low. You have the wick right here. You have in this middle, you have this wick lower than this wick right here. And if you look at this wick right here, you have this wick higher than this wick right here. This right here is a very key pattern. This right here would be delineated as a swing low. So what is a swing low basically? It's when, let me see if I can work this good for you. It's when you have a point like this. In the middle wick is the key. When you look at the middle wick, you want to look to the left and you want to look to the right of it. If this wick is lower than the wick to the left of it and the right of it, this would be considered a swing low point. This is very, very important. You want to write that down. This is considered a swing low point. You want to get this visual in your head. And let me see if I can get rid of this crosshair for you guys so that you can see. I think it's in static. Nope. Trading. I can't remember exactly where this is. Let's see. I want to get rid of this crosshair for you guys so you guys can see this. There we go. For now. Oh, actually, no. Let me do it like this. Let me just switch this. So yeah, this is important. You want to note this pattern right here. When you have a wick in the middle and the wick to the left of it and the wick to the right of it is higher than the wick to the middle of it, this is what you would call a swing low. And then the opposite, this is what that's what you would call a swing high. So another example of a swing low would be this right here. You see how this wick is lower than the wick to the left of it and then to the wick to the right of it. That is another swing low point. And let me show you one more example. You have another one right here. Look at this three candle pattern right here. You have a wick that is lower than the two wicks next to it. So a wick that is lower to the wick than the right of it, then lower than a wick to the left of it. So this would be swing low. This is your swing low right here. This is a swing low right here. Another swing low right here. So an example of a swing high looks like this one formed right here. Look at this example right here. You have a wick that is higher than the wick to the left of it and the wick to the right of it. This is what you would call a swing high. This is the opposite of basically a swing low. This is very important because you're going to anchor your fibs from a swing low point to a swing high point and vice versa, from a swing high point to a swing low point. I'll get into more to that in depth as I get later in the video, but I want you to know what a swing high and a swing low point is right here. Another example would be this example right here. See how this wick is higher than the wick to the left of it and the wick to the right of it? This would be considered another swing high point. And if you come back over a little lower right here, we have another swing high point right here, because this wick is higher to the wick to the left of it than one to the right of it. You have another one right high right here, 934, 921. This would be considered a swing high point right here, because this wick is higher than the one to the left of it and higher than the one to the right of it. So this would be the swing point right the swing high right here. But that's the gist of it. That is what you want to mark down in your notes. Get that pattern ingrained in your head, because it's going to be very important, and that is how you're going to anchor your fib levels. So, why is this strategy so important? What is so important about this strategy? Why is it important? Well, this strategy helps me, gives me specific set of rules, and it gives me something to follow. I mentioned the fib levels. Let me show you this right here. So this is part of the OTE strategy that ICT mentions. He does show his levels in volume 1. Let me show you the levels right here that I have them marked for you. Anything that is check marked is what is used in the OTE levels. So just a little brief explanation of the fib levels right here. You have your 62% level. You have your 62 to the 79% level. That in between those levels is the OTE levels. The 70% level, which is right here, is the sweet spot, is what ICT calls the sweet spot. That is the optimal trade entry level. That's what makes this strategy very key. And this is you're going to use the Fibonacci basically a lot for this strategy, because it's going to help you frame your trades. So with that being said, another thing that I want you guys to note is that in between these levels is that okay. So some people may ask, why is these levels so important? The levels are important because let me rephrase that for you. The 62% to the 79% level is important because this is where your entry is going to occur when using these levels. ICT mentions that he uses the 60% level to ensure that he gets into the trade and to cover any spreads or anything else by that chance. But for the strategy, he does mention to stick to the 62% level. He does mention to enter in on this level. The 70% level is the optimal trade entry level, but sometimes price does not always trade to the 70% level or the 79% level. So ensuring that you get that entry on the 62%, this level is key. I do take my entries off of the 62% level because price does not always hit that 70% level or 79% level. Now, if it does happen to hit these levels, that's okay. If you get an entry right here on these levels, that's perfectly good. I like to ensure that I get entry on the 62% level. Now, you may notice that the 100% level right here, the red line, this is where your stop loss is going to be placed, or your stop loss would be placed at or near the nearest institutional level. What do I mean by institutional level? And what is the institutional level? Basically, the institutional level are where banks tend to put their orders because it is just an easy level to identify. For example, let me get the fib off this chart for you. For example, if I go right here to price in between the 140.000 even level, that is an institutional level, the 140.000 even level. And write this down somewhere in your notes if you are taking notes. The institutional levels are the 00 level, the 20 level, the 50 level, and the 80 level. On the chart, just for example, on the chart, your levels would be on here would be the 140 one. For example, over here, if you take a look over here, you see you have the 140.000 level. The next institutional level after that level would be the 140.220 level, which would be somewhere let me try to mark it out for you. Let's draw a line so I can try to mark it out for you. Let me switch that, and then let's make that 20. Good. So that after the 141.00 level would be the next institutional level. And if you switch the coordinates on here, you switch it there to 5, that would be your next institutional level after that. And then you switch it right here to 8. That would be your next institutional level, and then so on and so forth. Those are very important levels. You want to remember those levels, regardless of what you're trading. Those are very important institutional levels. Moving on to the time. What makes this strategy so different outside of just Fibonacci trading? The thing that makes this different that ICT mentions is the fact that you incorporate time and price into your trading. So with this strategy, you want to write this down as well. We are not I don't take entry until 8:30 a.m. New York time in the New York session. ICT mentions why delineate the 8:30 time to start your entries. That is the time where a lot of news comes out in the New York session, and I believe that's also when the news embargo lifts, and that's when the new United States tends to release their news. So that's why you want to begin at the 8:30 time frame, and then the end of the entry time frame is at 11 a.m. So write that down, and I'm going to show you over here as well. You always want to have your chart set to the New York time frame. No matter where you are, it doesn't matter where you are, whether you're in the islands, whether you're in London, England, or Alaska, wherever the case may be. You want to have this set to your New York time frame, and whatever the local time frame is for 8:30 at New York, that is the time. That's the time that you're going to use. But you always want to have this set to New York time. And that is the entry time that I use for this strategy. With this strategy, price. I'm sorry, not price, but the pattern can form before this, before 8:30 a.m. It can, the price it can occur before 8:30 a.m. and it can occur during or after 8:30 a.m. But I do not take any entry until 8:30 in the morning, in the morning New York time. That is very, very key with this. You want to write that down and remember that. Moving forward, so let me just try to get into these charts for you. Let me try to break it down as best as I can for you. So a lot of times, price tends to rely on the previous day high and the previous day low with this strategy, depending on what do you feel price is going to do. What do you think is bearish, or what do you think is bullish? So just for an example right here, let me go down to a 5-minute time frame, and let's just go back as far as we can. Let me remove everything. Let's just go back. I'm not even gonna worry about you know what. Let's go right here. So let me show you what I do day in and day out. So day in, day out, the first thing that I do is I mark out. I'm sorry. The first thing that I do is I try to go to my daily time frame, and I try to recognize what is price doing, where did it come from, and then are we bullish or are we bearish? So if we come take a look at here, we can see that price has been making small little retracements and still continuing up. It's been very bullish. It hasn't made any harsh retracements to the downside. It hasn't shown anything. So my first instinct would be that price is looking very bullish. So now I'm looking for previous day's highs to be taken out. So we are on Tuesday. Monday, it's all we'll use Monday example right here. And I still mark out the previous day's low, just in case. You never know. I still mark it out just because. But on my daily time frame, I try to recognize what is price doing, and then I come down to my 1 hour just to see if see what I can see if anything catches my eye, and then I try to match up my time frames. If the daily is bullish, if the 1 hour is bullish, I try to match it down to my entry time frame, which would be the 5 minute or the 1 minute. I tend to stick to the 5 minute, but I try to go on to my 1 hour to see if there's like any fair value gap that I can identify. But I don't base my trades just off of the fair value gap. I do stick to the Fibonacci retracements. I use them as my entry. And then a lot of times with this strategy, ICT does mention that most times you don't even need a bias. You just want to wait until price shows you what it wants to show you, and then you just go off of that. But with that being said, let me mark this out for you guys. PDH is previous day's high. PDL is previous day's low, just so you guys don't get confused. And let's go ahead and stretch this out to the 11 o'clock for the next day. So if I've already gone on to my daily time frame and I think that price is going to take out or trade to its previous day's high, I am only looking for buy setups. I'm not looking for any sales. I'm not looking for previous day's low to be traded to. I am looking only for buy setups within my time frame that ICT mentions. And if let's drop down to our 5 minutes so that we don't get any confusion. So as you can see, this red line here is the previous day high. The low right here is the previous day low. And let's go ahead and let's mark out. Well, for one, let's start out and mark out our midnight time frames. These are important as well, because it'll help you see what was done the previous day. But the only thing that I care about from the previous day is the previous day high and previous day low. I don't really care about, what did it do in the previous day's London session, what happened in the previous New York session. I don't look for that. I tend to just look at the previous day high and the previous day low. That's the only thing that I care about from the next day. So let's go ahead and let's mark out our 8:30 to 11 a.m. time frame. We'll go ahead and we'll make this a different color so we don't cause any confusion. Let's just do green for now. So as I stated earlier, let's move a little bit forward. So now we're in the next day. As I stated earlier, this is the window that you want to enter in between that 8:30 time frame and the 11 o'clock time frame. Now, your setup can occur before this 8:30 time frame. It can happen. It can occur before this 8:30 time frame, but as I stated, I don't enter until 8:30 comes. So if price just so happens to make an OTE entry before my 8:30 time frame, I don't enter. I literally wait until 8:30 happens, and then if it does come back into the OTE area, that's when I take my entry, and that's when I'm looking to enter the trade. So let's go ahead and fast forward. all the way until we get to our time. And remember, we're bullish, so we're not looking for any sells. We're looking for buys. Just for a random example. Price trades towards the previous day high, takes it out. And that's okay, because we're still going to look for continuation we're still going to look for a continuation until continuation up. I'm sorry. We're still going to look for that continuation. So now we've entered our time frame of we've entered our window of time to enter the trade. And I'm just, as you can see, looks like we have we were selling before the New York time. In London session, we were selling, but I am looking to, but I identified that we thought that we were bullish, so I am looking for a bullish continuation up into the to the upside. And we do have a market structure shift right here. We have our low right here. We have another swing low right here. We are looking for that continuation. So let me just play it a little bit further. Looks like we got our entry right around this area. And yes, we did. Now, most people may think that this is too early. They will wait until price pushes past this wick right here. If you look up right here at the top right here, you can see that the high of this wick is 143.621. It's very high. Let me get rid of this line for you so that you can see it. If you look right, this wick right here broke this swing high right here, which indicates to me that this is a market structure shift with a possible continuation to the upside. So now that we have this market structure shift, we can draw our fib from the swing low point to the swing high point where it broke, which is to our swing high point. In that case, it would be this one right here. And then we are looking for a retracement into the optimal trade entry area right here, which would be our 62% level. It does hit. This is a trade that I would have taken. We get entry right here on this candle. It does overshoot it a little, and that's fine. Our entry would go to the nearest or closest institutional level. We have 143.39. You can round it. ICT mentions that we don't have to go all the way down to the very, very lowest institutional level. You want to try to work in between. You want to know which levels you're in between and work in between that. So right now we're currently in between the 50 institutional level and the 20 institutional level. So the stop loss right here is below probably the midpoint of those two levels. So I would round it. I would get somewhere close to the institutional level, which would be, I'm not going to go all the way down now. I'll probably round it to probably about the nearest one, which would be probably about right here. And then basically at this point now, you're just looking to target the previous day's high or trade towards the previous day's high. Yes, we have already went through it, but I am looking for a continuation above this. Normally I target the first standard deviation, which is the 0.5 standard deviation. Let me change this for you guys. Oh no, I'm sorry, that is the wrong one. Let me change this to values. As you can see, so we take our entry to the 62% level. We take entry right here. This is normally what I target. This is enough for me. ICT does mention that you can target the -2 standard full standard deviation. These are where you can look to take your partials, but you don't always have to use these as target points. You can just use them as reference points. You can literally target the next institutional level if you wanted to. In this case, we're around the 50 level, so you could target the 80 level, which is up here, and it's above previous day's high, which is where we're looking to take to be above. But normally for me, around this level, if I can get to this level, this is normally all right for me. I'll take majority of my trade off right here if I can, and then I'll just let price run up here. So with that being said, we take our entry right here, we let price play itself out. If it takes us out, it's all good. And as you see, price does take us out, and that happens. This strategy isn't perfect, as I stated before. See if we get another chance for an entry right here. We do get a break of this candle right here. Let me go ahead and delete this for you. But as you can see, price did, let me run it back right here. Price did take us out right here, but as you can see, it did run up to where my take profit would have been. It did take me out. You probably could have went with a wider stop. This is entirely up to you. I don't like to have too wide of a stop loss, but this is entirely up to you. And if you play it out, you know, price does eventually hit that 2 standard deviation. What ICT mentions is where you can take full off of your trade. This would have just been a losing day for me. I didn't see another opportunity to really get in, and that's okay. Maybe right here would have been another opportunity, but I don't think this was enough of a retracement to get in. No, it wasn't enough of a retracement. So this would have just been a trade that I missed. It happens. We're well outside of our time frame, and at this point, we just go to the next day. Let me show you another example. Let's move this over to, this was Tuesday. Let's go ahead and get this out of the way. Get all this jazz out of the way for you guys, and we're just gonna try again for the next day. So we're on Tuesday right now. Let's go ahead and mark out Wednesday's time frame, and we're gonna mark out the high once we get there. Let's go on that. We're on that 1 hour time frame, which is what we want. So at this point, we're marking out the high of Tuesday, and then we're gonna mark out the low of Tuesday. And I stretched that out to 11 o'clock, so that that is when the time frame closes for me for entry. This is Monday, this is Tuesdays. Stretch that out to 11, and then let's go ahead and mark our 8:30 time frame. Let me go on that 15-minute time frame. Let's go ahead and mark that out. We have 8:30 here, and then we have, oh, sorry. And let's go ahead and mark out that 11 o'clock time frame. And this is just midnight. I was just using this to delineate when the new day starts in New York. But let's go ahead and let's skip forward to, oh, and I'm sorry, let me make this previous day's high, previous day's low. And we took out as you can see, before we even get to our entry time frame, price is taking out previous day's high. And once we get into our 8:30 time frame, price has made numerous entries, numerous chances to get in. This is a nice retracement. Go ahead and mark it out for you, but it does not happen. Oops, sorry. It does not happen during the 8:30 time frame, so this would have just been we would have missed out on this. It does come down to here and push up, and it does it once again here, if I'm not mistaken. Let's go ahead and mark that out. I don't think this dropped further down into that. Nope, it did not, which is okay. So now that we're in our entry window, now we're looking for the continuation. It took out previous day's high. I'm looking for it to continue. I'm not looking for any sales. Let's play it a little further, and we do get a bit of a retracement right here. We have a swing low right here. We get a retracement to this swing high. We do get our drop down into the into our optimal trade entry, but we take entry at the 62% level. So we go right here, we set our stop. We're in between, at this point we're in between the 20 and the 500 level. Our stops would be 24.2. So we could put our stop right here at the institutional level, which would be the 200 level, or the 20 level, I'm sorry. Put our stops there, and we target the half standard deviation level. We have entry. Let's play it out. Wow, we get taken out again. Which spread? Definitely get taken out. That must have been a news counter right there. We get taken out again. But as you can see, there's not much, to the strategy to do, but it is very straightforward. Let me see if we get another entry by any chance. I probably would not take too much with this. This is very, very tricky. This one possibly could have worked, but not too much. Nope, it didn't even come back and retrace. So no, probably would not have worked too. Probably would have let this day go as well. Just would have been a losing day, and we're outside of the our window here. So let's try again we were on Wednesday, so let's try again on Thursday. Let's go ahead and skip through. It would be about right there. Well, no, let's put this one at 11, and we'll put this one at 8. We'll make the adjustment. We'll make that adjustment. And let's go ahead and let's play price out. Clear that out. Clear that out, because we need to see the previous day high and low. Okay, so at this point, the previous day high and low would already be set. I have my previous day high right here. I mark it out to 11 o'clock. And then we have the previous day low marked out. Previous day high, previous day low. And then we just go from there. That's what we do. And let's play it forward. Let's get it going. Let's jump down to our 5 minute. I'm sorry about that. Let's get this to 8:30 to the 8:30 time frame. And then let's skip forward. So now that we're in our window, oh wow, what a candle. Wow, we're in our window. This had to have been news. This was definitely 100% news. I don't like to trade stuff like this, but let's see if we do get a retracement back or some form of an entry. You do get a bit of a retracement right here. You could have taken entry right here. You get a bit of a entry right here. You could take this, although this is this one would have been a tricky trade. We're in between looks like we're in between that 50 level and the 80 level. So we're at 60. I would have rounded this down to maybe about the 55 level, somewhere around there. Took my entry. Then we get entry up here. Then play price out. Man, can't get a winner. Oh man, but basically you get the gist of it. This is how I would look for it. I'm not, you're gonna take L's with this. And we don't get entry. We just keep going. We keep trying. Let's go ahead and clear all this out. We are on Friday, so give me a second here. And then let's go to 11. So, with that being said, I believe that this is going to end up being the previous day high for Thursday, and that's okay. Previous day low for Thursday would be right about here, if I'm not mistaken. As you can see, our bias, we were bullish. A lot of times you don't need a bias, but you can just go take it with a day by day and just look. But a lot of times you can just not have a bias and just act accordingly. Like if it takes out previous day's high, well, I'm looking for the continuation, even if I don't have a bias. So if I didn't have a bias, I'm just looking for whichever one to be taken out. If a previous day's high was taken out, then I'm looking for the continuation above it. And right here we get into our window. Let's drop down to the 5-minute. Looks like we're getting that retracement to the previous day low. And as you can see, we get entry right here. Let's just say, for instance, let's come back for a second. Let's come back about right here where the swing low was formed. Let's just say you were targeting the previous day low, or you were looking for price to trade to the previous day low. Well, if you let that form, you get a retracement into your optimal trade entry. Draw that from the swing high to the swing low. Let's go ahead and extend it out so that you can see. And we just miss it, but this is still a good entry. You probably just slightly miss it, even though this is still a good entry. We're gonna put a short right there. We're in between the 50 and the 80 level. So my stop loss probably would have gone not too high, probably about right there. I don't like my stops to be, or you could place it up here at the institutional level. Let's go ahead and do that. You could place it down here. My target is probably right here. This is where I'm good. And let's say this is your sell entry. Let's play it out. Let's see how it plays out. Boom. You get a price. Price does hit. And it looks like it goes even beyond that. Boom. Price does hit that -1 standard deviation. And this is what I do day in and day out. Day in and day out. I don't care. This is what I do. And that is the strategy that I'm using moving forward. You don't need anything else. This is the winning strategy for me. It has been very, very successful for me, and this is what I am using moving forward. Sorry for showing some losing trades, but with this, that tends to happen. You get a sell. I just showed you a winning one right here for the sale. I'm gonna do my best to show you guys more of this, even though if they're short videos. But this is just what I do on a day-to-day basis. I'm gonna try to make another video like this for you guys as well. And yeah, this is just what I do moving forward, going through to trade. So I'm gonna end the video right here. If you did like this video, feel free to leave a like. Feel free to leave a comment if you got any questions. I would do my best to answer them for you. I'm definitely going to show you guys more videos as well. I'm going to show you some trades that I have taken. I'm going to try to do that more often for you guys, even though they may be short. I'm still going to show you that this strategy does work. It is very successful, and hopefully that you can I can break it down for you to help you to help it make sense to you. With that being said, I'm going to end the video here for you guys. Make sure to like, comment, subscribe, do whatever you need or whatever you feel you want to do for me, and I will catch you guys in the next video. Take care.